This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, hello everyone. This is AJ Monty, Chief Market Strategist with the Market Guys. I'd like to welcome everyone to today's incredible session with the markets. I'm sure a lot of you are paying attention to what's going on right now. I just loaded a trading checklist, and you'll see that file now at the bottom of the handout. So what I'd like to do is invite all of you, whether you're a seasoned trader / investor or someone who's brand new to looking at the markets. The checklist that I gave you, I'll be going over with you, and that will help you develop more or less a feel for the markets and reading the signals as they show up on the technical charts. Now, before I get into that, let me pull up one chart here. Hold on. And that is going to be the VIX. Now, for those who have been following along with the market guides for a while now, understand that there are going to be a lot of brand new people listening in tonight. We have people calling in from the Atlanta Option Group. We have people who have been contacting me through our Market Guys Facebook page. I have friends, I have family members, I have neighbors that are listening in, some of which have never even looked at a technical chart before. So I'm going to pull back just a little bit in the way I talk and explain to everyone what the VIX is. The volatility index is more or less, excuse me, volatility index is more or less an indicator. It's an oscillating indicator that measures the volatility of the market, but it's also called, or has been labeled, the fear index. And if you go back in time and look at this year after year for 20 years, you can see that the volatility index goes up when the general markets are going down. And that's because when markets drop, like we've seen over the past month, the fear of losing and the uncertainty of what's to come generally triggers fear in the investor community and anyone else who's not even connected with the general markets. So keep an eye on this, because I did make some forecasts. As you can see from this daily chart, every Friday I record the weekly market report, and that goes out on the most part Saturday morning at 6 a.m. Last Saturday it went out a little bit later, around 10, but it goes out Saturday morning every week. And on that report, I draw lines of where I think the prices are going to go for the following week. So last Friday I said most likely the VIX would go up, and you'll notice this pivot point here was the target, the short-term target, which we, by the way, reached today. And then I said we would most likely start to drop. Now remember what I said. When the volatility goes up, the general markets go down, so they're inversely related. So understand, again, without being too sophisticated, if I'm telling you this is inversely related and the volatility is going to start to drop, that will be bullish for the market. Now, before you get in there and take all of the cash that you might have and start putting it in the stock market, let's look at the S&P for a second, okay? This is the S&P, and you can see right here where my cursor is, February 19th. I had this point marked, and from this point on, we basically went into free fall for this pandemic, or whatever you want to call it. Fear jumped into the market. People started selling. Funds and money managers started selling. There's all kinds of activity on the downside. But understand that fear, like anything else, is temporary. So once the fear subsides and once people get an idea of what the near future has in store for them, we could very well start to see those move cash out of the market, move cash from the sidelines and then go into the market. Now, keep in mind, if you have questions, I will be taking questions along the way. And I see, Ken, I think there's a question there, am I talking? Well, yeah, I'm talking now, so hopefully I'll help you. And then Ron has some questions, and I'll do my best to work. Sabu, I see questions there from you as well. I'll do my best to work this into the presentation and then give you some next steps and some ideas. First of all, when you see panic in the market, we call that capitulation, and fear takes over. Understand that one person's level of fear is another's opportunity. I'm going to say that again. One person's fear is another's opportunity. All right, so in order to understand this, we have to go back in time and see when it's happened before and what's happened after the result. Now, for those of you who have read my books or stayed in touch, you may know already that I came onto the trading floor on August 15th, 1982. Right? That was my first day of going from knowing nothing, to learning as quickly as I could. I then became sophisticated enough from watching the experts and learning and studying and reading books and taking classes in any which way I could. And I became one of the very first option traders on the New York Commodity Exchange, where gold was the first option contracts to be traded before silver. Gold was marketed then as gold for the not so bold. I remember that because they were marketing it as a lesser or less risky type of a contract. Now, understand, take this as a lesson. Don't just jump into the markets tomorrow. As an options expert, I believe that the years, not just the months, the years to come are going to be incredible opportunities open to us like I've never seen in almost 40 years. Right? 1982, 2 more years, I'll be involved in the industry for 40 years, 4 decades. Some of you haven't even been alive that long, and I've been trading that long. Okay? Now, in 1987, I went through this exact same thing. The big exception was, and if you look at the Dow, you can see that there's price drop the same way as the S&P. Back in 1987, we didn't have the internet. We didn't have cell phones like we have today. We didn't have social media. We didn't have 500 financial channels to watch. We had a little device in the middle of the trading pit called the Quotron. It was what Mike Bloomberg basically came up with, and that's how Mike made his billions, was he sold information. Quotron was eventually bought out from Mike, and I believe it went to Reuters or another company, and the information age started to really blossom. Because at the time, imagine this, a whole trading pit with hundreds of traders all gathered around one little Quotron in the middle of the pit, because that's where we got our information. Now, just like 1987, the markets dropped tremendously and very quickly. We stood there in awe just watching prices drop. But after 1987, what happened? Markets recovered. Not too long again after that, near 13 years later, right? The tech bubble came out. And in 2000, we had another crash where that originally was fueled. Everyone thought the world was going to come to an end then because of what? Anyone mention the big scare that was coming and building up into the market? No, there's a little bit of a delay there. It was Y2K, right? Y2K. Everyone thought that because, there you go, Rick is absolutely right. Y2K was the big scare, and there were some people that really thought the world was going to come to an end because if computers crash because of program challenges and technology shifts, everyone thought computers were going to go dead, the world's going to come to an end, commerce is going to stop, blah, blah, blah. Guess what? The world didn't come to an end. Fast forward 8 years now, from 2000 to 2008. I could even mark this on my monthly chart because now we're getting into more current time period here. Here we go. 2007, back here, for those of you who have been involved with me long enough, you'll know I was putting warnings out long before the crash of 2008. Now look at this segment right here. I don't want to draw too many lines because I use these lines, but look at this. This was the drop from the end of 2007 through 2008 and the beginning of 2009. There's the drop. Look at today's drop, right? Now here we go. This is not, again, rocket science. Remember, from 2000 to 2008 there, actually, let me back up. 1987 to 2000, we had 13 years, right? From 2000 to 2008, we had 8 years. From 2008 to current time, what? We have 12 years. You see, so from 10 to 15 years, there's a cycle. Anywhere, if you break up time into 10 to 15 year time segments, every 10 to 15 years, and sometimes maybe a little sooner, we go through this flushing effect. All right? We go through this. This is, now, I'm not saying the coronavirus is normal, but for the general markets, corrections are healthy. They're generally followed by massive upswings. It takes a little time to develop, but once confidence comes in, we have investors build confidence, and that money starts coming back in. But what I'm going to talk to you tonight is a combination of all these things, and hopefully I'll be able to open up your eyes to the opportunities. Now let's take this one step at a time. I think we all know that there's a pandemic. I also think that we're very much aware that every single channel you put on and almost every internet website you open up and every gas station now that you pump gas from is warning everyone how to clean their hands and how to avoid corona and all this, right? So there is obviously a lot of emotion charged into this market. Now, as prices are dropping quite dramatically here, all right, now I'm going to zoom into the weekly chart right here, all right? There is a very dramatic drop, free fall here, but what you need to understand is that during this drop, while the general markets and indices were dropping, there were other stocks that were rallying and rallying quite dramatically. So let's talk about those so that you understand the opportunities that I'm talking to you about. I'm not looking at the questions right now. Hold off just a little bit and I'll go back to those and check. Now, here we go, back even before 1987. Let's go back even further to the crash of 29, which launched the Great Depression. Remember, information traveled very slowly. You had no computers at the time. You had communication between Washington and the citizens of our country was actually slowed down a bit as well. There wasn't as much noise, as I call it. There wasn't a lot of noise. But the crash of 29, the stock market dropped 22 to 23%, not in one day. It was over a series of days, and then the market started to bounce. Back then, the Great Depression, as we know from history, lasted about 10 years. Do I think we can see a world depression? Yes, I do. Do I think it's going to last 10 years? No, I don't. And that's because as time and information has advanced, so will the recovery times. Please understand that. The recovery times will be a lot quicker than what we've seen even back in 2008. Why? Because social media now is spreading news faster, especially good news. Yeah, of course, we know the bad news spreads quickly, but the good news will spread quickly as well. And the telltale signs of recovery and bouncing and money moving is going to help each and every one of us. Now, if I go to that checklist that I sent you, okay, trading checklist, open this up. When we're looking at a chart, the first thing we look at is the type of candle. Now, I'm not going to get into candle patterns right now. This is where you would plug yourself into some of my classes and some of the videos I have on my website that are free. Understand types of candles give signals. They're bullish signals, they're bearish candles. There's some that signal indecision, maybe increase in fear. Number 2 on this list is volume. Volume, and then we look at the moving averages. Now let me take this one step at a time. Today's candle on the diamonds, you see here? Let me go to a daily chart, actually. You can see that today's candle is a red candle. But look at what's happening. It's a small-bodied red candle. It's known as a spinning top. Spinning tops are generally found during signs of indecision. Now, with that red candle, there is still an increase in volume, which tells us that the sellers are in force. So think of this bar down here as us measuring the throttle. How much fuel is still going into the selling activity? Well, there still is. There's still fuel on the sell side. What we want to look for first is a drop in this volume. When we see a drop in the volume, that means the sellers are starting to slow down. I've said that many, many times on past sessions. We want to keep an eye on the volume. Another thing, look at the divergence. Look at how far the price is from this blue line, which is the moving average. I always tell people the moving average is what I consider to be fair value. So prices are trading well below, i.e. this fair value, and the indicators down here are telling us that things are oversold. I'm going to leave it at that for now as I go into phase 2. Remember, the stock market is dropping, but there are other sectors that are moving and moving quite dramatically to the upside. I'm going to give you a lot of freebies here, and then I'm going to open up the audience to see if anyone in our group here has found other opportunities like the ones that I'm mentioning. Now, remember, I mentioned pandemic. We all know and have heard of this new buzz phrase, social distancing. I had the conversation with my brother-in-law about this not too long ago. Social distancing seems to be the way everyone's moving to prevent from A, getting a virus, or 2, passing on a virus to someone else. Social distancing, right? Wherever before in our time have we been required to stay 6 feet away from each other, right? Or to sneeze in the corner of your elbow, right? I mean, yeah, these are things that a lot of people practice, but now it's being pushed on society, social distancing. Now, as people are quarantined, they're being more or less driven to their homes. A lot of people are working from home. A lot of students are taking online classes from home. Think of where the money is flowing. I already told you, money is flowing out of the stock market, but where is money flowing into? What sectors? Who could tell me there? What about what about stocks that have that have helped with killing the virus? Right. Here's one for you. CLX. Notice what happened to Clorox. I even forecasted that we would bounce off the support. We stormed up. Now Clorox came back down because traders have gotten a hold of this. I would not be surprised. Let me delete this here. I would not be surprised if this support level on Clorox held and we saw maybe a little bit more further down move before moving higher again. I would not be surprised at all to see Clorox and Clorox products moving. How about this one? I go to Costco. How many of you have gone to Costco and you see the shelves being empty? Now, this stock is still relatively, it didn't take the hit. Notice how this slight downturn over the past couple of days is not falling in line or as severe as the general markets. We have support down here around 270. This is another one. I think people are going to be surprised by the level of profits and earnings that these companies are going to make. How about Amazon, AMZN? I've been talking about this to our subscribers quite a bit. Look at the jump in Amazon. Amazon in 5 days went from $16.50, it rallied $200 before topping out and pulling back. I think Amazon is going to go right back up and start to drive higher. Why? It's not because I'm telling you that the charts are telling you that. Yeah, the charts are looking more bullish than bearish. But think about it. When people are staying home, they don't want to go out to shop. Amazon Prime. You can get your products. You may not get it in 2 days like they used to give it to you, but you'll get your products delivered right to your front door. How about this one? I'm going to keep going, folks. You can't get your food because you don't want to go to the supermarket. How about PZZA? How about Papa John's? Look at this one rally. It went from 35 to 54 in 3 days. Let me say it again. From 35, actually it's down here at 30, to 54 in 3 to 4 days. By the way, this candle pattern, for those of you who are brand new to charts, this is known as a hammer pattern that is extremely bullish. So for those who are trading, there was an opportunity. For those who trade options, this continues to be an opportunity. I'm going to keep going, right? California. How many of you live in California? Just by show of hands. Who lives in California? Just put a Y next to your name instead of, because I can't see all the attendees. How many of you live in California? Just sign off. Okay, Todd does. Eduardo does. People in California right now got 40 million people. 40 million people are about to suffer from a well-known syndrome called cabin fever, right? 40 million people. They're home. Why do you think Netflix is up? Netflix subscribers are hitting record highs, according to Netflix. Their subscription levels going through the roof. That's profits for them. But guess what, folks? You have to think about this. If you have 40 million people in their homes, what are they doing? They're watching television. They have the internet on. They have their air conditioners on. They have the microwaves cooking. They got the stoves going for breakfast, lunch, and dinner. Power surges are going to take place in California, and we already know that their grid is already weakened. We know that from watching the natural fires, the wildfires, that their grids are already fragile. What's going to happen if all of a sudden we get news that California is in a total blackout? I'm not saying that's going to happen, but see, this is where you have to start thinking about what could happen. We cannot be reactive in this type of a market. I'm going to calm down a little bit because I get really excited about this, folks. We have to be proactive. We have to think ahead. What if all of a sudden we have power outages? Guess what? I literally 15 minutes ago got back from Cedar Key, and I'm in Longwood now. Why? Because we had a power outage in Cedar Key. No lie. I wanted to make sure I was going to do this call. I drove 2.5 hours just to make sure I had an internet connection and power to power my computer so I could deliver this for you. So what's going to happen if all of a sudden people start thinking, oh, power outages? Well, look at those from Long Island. Massapequa, Long Island had a blackout today. What's a great company to look at? How about GNRC? This is Generac. They produce generators. Now, notice how the price has been going down. Here's my forecast. When things start heating up and people start thinking, well, maybe I should be better prepared, they're going to go out there and buy generators. How do I know that? Well, I do know that for sure. You know why? Because I live in Florida. And every hurricane season, when there's a tropical storm that turns into a hurricane, the news has everyone watching the Weather Channel. See, I go through this every hurricane season in Florida. I know the drill. People buy generators, they buy lumber, they buy water, they buy batteries, they buy flashlights, they buy emergency materials. So here we are again, painting this picture, the new catchphrase, social distancing. We have to also think emergency preparedness. Generac. Look at the companies that market bottled water. Okay, look at the companies that are supplying some of the hospitals with masks, like Tractor Supply. Look at some of the companies out there that produce emergency food or even survival food, like Legacy. Let me hit the pause button for a second, folks. I want you all to write this down. January 10th. January 10th. Ready? Get a screenshot of this. Let me go YouTube. I'm going to show you something here. Google AJ Monty WMR. Okay? Oh, I got to put the space in between. AJ Monty, WMR. Go and look for my report that went out January 10th. Actually, do it this way. WMR 011020. All right? Now look. Where is it? January. It's in here somewhere. But January 1, where is it? Anyway, it's in there. I'm not going to waste your time looking for it. It's in here. January 10th of this year, I called the market top. Okay? I also have been warning people about emergency preparedness. You can see I have another channel here called Food for Life. I show people how to build greenhouses, how to hunt for their own food, how to fish. Listen, I'm not end of world prepper. What I'm trying to get across to you is that in January, I saw the tide turning, and in January 10th, let me show you what this looks like again. January 10th, right? Let me get my cursor here, right there. Right here, I said that the markets were going to start rolling over. Right here. And guess what happened? We had 2 months, almost 3 months to prepare. Did I think it was going to come in the form of a virus? No. Quite honestly, my wife and I have been preparing for the last 7 years for an economic meltdown, but I thought it would come in the form of a devalued dollar, where interest rates would start to go through the roof, hyperinflation, national debt. I really thought it was coming. When I started hearing about how our tax revenues were being depleted and our national debt and the interest on the debt was going higher, and that we're now 80%, the debt and the cost of finance debt is 80% of our GDP. Now all of a sudden our GDP estimates are coming in that we might even experience a minus 24% GDP. Am I telling you that to scare you? No. I'm telling you that because there's going to be huge opportunity out here if you just look at the charts and look at the news and then be proactive and start looking around, and you'll see that there is quite a number of opportunities. Here's another thing. I'm giving you some freebies, and I'm going to go to the audience and answer questions. What's the one thing that people cannot do without these days? One thing. Who wants to answer that? One thing. If you took everything away, almost without food, I'm talking about an item. It's their phones. Okay, people will always have their phones. They connect through the internet through their phones, and if you look, take a look at S. Pick a symbol S. Oh, there we go. Sprint Corporation gapped up, okay, in February, but look, pulled back a little bit. This is the hammer pattern right there. I think Sprint has some great opportunity there for people who want to trade it, especially the option trader. Look at AT&T. They offer dividends, completely oversold. All right, AT&T is very oversold, but look at this. This is 20 years, folks. 20 years. Let me connect some of these dots down here. There's this major support level. There's a major resistance level right there. So AT&T, if you go back now, it's stuck in a 14-year trading range. We're approaching the bottom. You start trading it down here, it gets up to 30, 35, you sell it, or for option traders, you want to put on some spreads and things like that. Again, don't just jump in the market tomorrow. Learn how to do this. Learn how to read the charts. AT&T still offers a dividend. They might cut back on that as they go through this rough patch, but AT&T provides internet, phone service. People need that, right? How about this one? Verizon, a little bit more expensive. This is a 20-year monthly chart of Verizon. Check this out. Verizon is still in an upward trading channel. Even though we have a down blip here, we have Verizon still in an uptrend. So as time goes on, we watch the charts, we position ourselves, we use risk management, and that is a great thing. Now, some people are excuse me. Several people asking about silver, SLV. Silver's just starting to turn up. I think the Chinese have a lot to do with the pressure on silver. I think the Chinese have a lot more influence in this market than you may imagine. And you got people like George Soros, which I put out in the report. I'm talking quickly, I know, because I have so much information to give you. George Soros, friends, George Soros started selling out of half of his Q position. I'll come back to silver in a second. In November and December, George Soros sold out of half of his position right here. And guess what he did? He then went into a long put position and took a short position in the energy sector. He knew exactly what was going to happen. He knew that China and Russia were going to have an all-out war in the energy sector. Guess what? He knew it, and he shorted it. And he made billions of dollars on the way down, folks. Billions of dollars. Now, eventually, these people who shorted the market anticipating the sell-off, eventually they will come in and buy back their shorts, which will add some pressure on the buy side. I think eventually we'll start to see bounces here as well. And you got to be prepared for that when it happens. Don't try to catch a falling knife. Wait for the bounces to occur. Lots of opportunity here. Okay, going back to silver. If you look at a 20-year monthly chart of silver, we're approaching the 20-year lows right down here around $10, right? The indicators on the monthly charts are still pointing lower. If I go to a weekly chart, you can see that the indicators are starting to turn up. Right now in the short term, I think silver is looking very bullish. You got this hammer pattern. You got a green candle here. You have a gap above the market. I think silver could go up another $1. So for those who are trading it, that's a nice, 8% profit if you can get it that in a short period of time. Option traders will get more. Look at gold, IAU. I'll look at IAU. It's bouncing off of a key support level here. Let me clear some of these lines. This is a weekly chart, remember. All right? This is a roll reversal support level, and gold is bouncing off of that. Looking at the daily chart right here, you can see gold is looking pretty bullish. I think IAU, which is 1/10 of GLD, you see it trading just under 15. I think it's going to go right back up and test the highs at 16. You see that? All indicators are pointing up down here. For those of you who have never looked at a chart before, this is called a CCI. It's a commodity channel index. It's an incredibly accurate leading buy-sell indicator. And yesterday, or the day before yesterday, we crossed with a buy signal. When this blue line crosses over the green line, it's a buy. Stochastics are going up. It's another oscillator, very close to a buy. So I think this is a great time for the metals right now. As long as you learn how to use good risk management, I would put your stop somewhere below support, and don't trade, crazy amounts of money in the process. Okay, what I'm going to do, let's see, I'm going to go right through here. Okay, Todd, Generac, Joel, I got that as well for gold. Hopefully I helped you. Ken right there. Rick, cell phone, mentioned that. Okay, now, here's what I'm going to do. If you are in a position where you have cash, tell me what you're looking at, okay? I got Pat there. Thought the VXX looked awfully bullish today, considering. Okay. But Richard also talked about TVIX, lost 200 points today when the market lost 700 points. AJ, can this be a reversal to the upside with stocks? Your thoughts? Well, again, the VIX, and if you look at TVIX as well, all right, TVIX, if this is what you're talking about, Richard, this one is about to fill a gap right here, and it still has some more downside to go before you see any kind of a bounce. But generally, when gaps fill, like we see possibility here, you get an 80% chance that it'll reverse and go the other way. So look at that. This is an ETN. It's an exchange traded note. It's not an ETF. Okay, Sean is looking at TTWO. Let's take a look at that. TTWO. Now, it's a software company. This looks extremely bullish right now because, look, we'll go to that trading checklist again, okay? Let's go through this again to help people who don't know how to even read a chart. First thing we look at? We look at the type of candle. Well, this is a long green candle, very long. That's a powerful green candle. It means the buyers are moving the stock up. However, when we look at volume, we don't see convincing volume yet. What we want to see as the stock moves higher is you want to see the volume increasing. The good news is stochastics is moving up. That's bullish. And the CCI crossed with a buy signal. So if we're looking at these, we would put bullish here. Let me move this out of the way. We would put bullish under the candle. Volume so-so. It's not bullish. It's not bearish. So I'm going to leave it absent there. The 20-period moving average, it's on it, so there's no big pull there. Are there gaps above the market? Yes, there are gaps above the market up here, so that's bullish, right? Because 80% of the time gaps fill. We have where the trading checklist go? Here we go. Okay, so we have gaps above the market. Stochastics are oversold and starting to go up. That's bullish, so put an X next to the bullish column. CCI is crossing with a buy signal. That's bullish. And it's about to go over the momentum line, which would be extremely bullish. So if I'm weighing all this evidence on my checklist, there are more buy signals than sell signals. That's basically it. So when you learn how to read the signals and do your checklist and weigh the evidence, then you can calculate. Now, let's say you decide to buy this stock. I know it's an expensive stock, or you buy an option in it. What do? Now you have to check to see where there might be a support level. There's a support level down here. Back in 2019, the stock found support at 90. So if you're going to buy this stock, you have to make sure you get out if the stock starts breaking down below 90. That's what you do. And again, even on the weekly chart here, this is pretty bullish right here. So even the CCI is starting to go up. Okay, let's get JNUG. This is Matt. JNUG. JNUG right there. On the weekly charts, okay, this is the gold mining ETF. It's a leveraged ETF, by the way. Please be very careful when you start trading that. Let me erase all these lines. Let's see if I can get the lines erased here. Hold on. Gotta get my computer. There we go. All right, now this is a weekly chart. The stock is basically finding its own support right now. Let's go to a daily chart. Go through the checklist. Ready? Here we go, Matt. Very small body candle. That's known as a spinning top. That is a sign of indecision. Now, here's how you read the volume on this one. The volume is dropping on the way down. It's dropping on the way down. I'm going to repeat it one more time. It's dropping on the way down. What does that mean? Who's some of our experienced traders? When the volume is dropping while the price is dropping, what does that mean? Yes, it means that the sellers are getting weak. Thank you, Todd. You're absolutely right. The sellers are slowing down, right? So if the sellers are slowing down, that means the buyers are getting ready to buy, right? So that would be bullish. Check that off on the checklist. The volume dropping is bullish. We have a wide divergence from this moving average. Remember, I told you the blue line is a fair value line. Do I think it's going to get up to 38, 39 right away? No. But you know what? If it gets halfway up and goes to 20 and I'm buying it at 4, that's a home run, right? Going down to the oscillators. Stochastics is oversold and starting to turn up. That's bullish. 2 days ago, the CCI started turning up and crossed with a buy signal right there. That's bullish. Are there gaps above the market? I don't see any gaps above the market, but that's the only thing missing from this picture that would make it a complete buy right down the line. Buy, 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 bull, 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 bullish signals all the way, right? Now, again, Matt, you decide to get in on this one, don't bet the farm on it, please. Please. By the way, folks, Matt is married to my niece. He's my nephew-in-law. And I know he plays the market. I know he does well. I just want to make sure, like Matt, and I'm telling this to everybody, Don't jump in with both feet thinking you're going to hit the score and big score and hit it over the fence. The better way to play this market, play small positions, try to hit one single after the next, if we're using a baseball analogy. Guess what? You take a swing to try to hit a single, every now and then you're going to wind up with a double and a triple. That's what's happening in this market. Don't try to crush it and make your fortune overnight. Not going to happen. This market's going to be around for a long time, and the volatility is going to be there for years. You watch. It's going to be at least a couple of years before the volatility really starts to slow down, and until then, we have opportunity. Let's look at Gutam. It's TXN. If I mispronounced your name, I'm sorry. Let's go through the checklist. That is a spinning top. This is Texas Instruments. This stock, Microsoft, and some of the box makers are looking really good because a lot of the schools are getting state funding to help children who don't have computers to learn from home virtually. So equipment is getting to students and even college students. My son is taking virtual classes from Florida Gulf Coast University, and things are going quite smoothly, actually, on the education side. But let's go through the checklist. Again, remember what I said. Follow me along, right? Is it a bullish, or is it a hammer, or is it a doji? A doji and spinning top are very similar. So this is a spinning top. When you see a spinning top at the end of a downward leg, that's considered bullish. We have a fairly good wide divergence from the moving average. That's bullish. We have gaps above the market. Follow the checklist. That's bullish. We have the stochastics turning from down to sideways and starting to go up. I think that'll go higher. That's bullish. Look at the only thing that's not bullish is the CCI. So if you're thinking about buying TXN, how about this? How about you wait 1 day, maybe 2 days, and wait for the CCI to start going up before you buy it? See, you want to put the odds in your favor, wait for all the signals to line up on the buy side before you buy it, and then set your stop. Okay, Philip says QQQ, looking at Qs. All right, remember what I said about George Soros? He got out of his Qs. I can tell you right now, people aren't going to stay out of the tech sector. They will not stay. They may have moved out on fear and try to protect themselves. But look at this little line right here. Let me show you what this means, Phil. You said, how about writing cash secured puts with a strike price of 175? I would not do that. I would not sell in the money puts right now. I would rather see you sell out of the money put spreads. Safer, you cap your loss and hit a couple of singles that way. Had some coaching students today. We were finding 15 to 20% returns in 30 to 50 days. Those are incredible returns, and they're very conservative with limited risk. Okay, so let's look at Phil. Let's take a step back. I'm going to go to a monthly chart. Here we go, folks. This is the overall long-term trend since 2008 on the Qs. See how all these lows are connected? If you're looking at charts for the first time, learn how to draw trend lines, okay? This is a fan line. That's when you take the last touch on that original trend line and you draw a line accelerating the trend, connecting as many dots as you can, or lows as you can. Look where the market has stopped on this month. It stopped right at the fan line right here. Now, my forecast, if you listen to my weekly market report last week, I specifically said with the Qs, we're probably going to go down to test the fan line. And I said we'll most likely bounce. Now, we've already hit, look at this, almost to the penny. See, I drew this line with the bottom here. Look, today we surpassed it by maybe just a couple of pennies. Now, I would be surprised if we start seeing some movement on the upside. I mean, as I'm talking right now, of course, everyone would love to see the Senate and Congress come together with some kind of an aid package, right? But right off to the left over here, these are the futures markets, right? This is green. Overnight right now, it's not a guarantee it's going to be green tomorrow morning, but right now, as people are deciphering the news, the markets are showing some signs of life here. These markets are open all night right here. These are futures markets. We're positive, 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 okay? So be careful if you buy into the Qs. You might want to do some options like Phil. If you want to buy shares, you can do that too, but just don't go crazy. Don't go betting the farm in any one position. All right, David Silber, welcome, David, is looking at MLHR. MLHR right here, Herman Miller Inc. Looks like a beautiful pivot point. Now, hold on, David. I got to see where the next level of support is on this. I'm going to go back to the weekly chart. Oh, don't see support there. Go to the monthly chart, 20 years. There's support. Actually, look at that. And on the low of August of 2011, we hit a low. Here in in December 2012, we hit a low. Bounced. See that? Now, look at that. Isn't that incredible? This month, our low right here coincides with the support level from back here. That makes me feel very good, David, because right now, if you look, you got red, 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 red. A lot of red there. Let's go to the weekly chart. Red, 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 red. But look at this. We have 1, 2, 3, 4, 5 reds in a row. That's a hammer pattern here. We're long overdue for a green. That's called the stale red light. Now, let's go to the daily chart. Now that we have support, that looks pretty strong. Let's go through the checklist again. That's more or less a hammer pattern. The volume dropping on the way down is bullish. All right, lower prices with lower volume is good. And we say about a 15, 20% drop in volume today on a bullish candle. Wide divergence from that moving average. That's bullish. You have gaps above the market. That's bullish. Oscillators are crossing with buy signals. That's bullish. Here's another buy signal. Bullish. Every single point on this checklist, bullish, 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 all the way down. Is that a guarantee it's going to go up? No, it's not. So if you buy it at 1942, protect yourself with using the 1% rule. I'm not going to get into that right now, but protect yourself by putting a stop loss order somewhere below support. Because if it breaks down below that 20-year support level, it could go a lot lower. Percentage-wise, that one could still go lower if it breaks down below support. All right? I got some questions coming. I want to address this because I'll probably run out of time at the end. As you can imagine, I have a lot of my students online with me today. We have a lot of option traders as well from the Atlanta Option Group that Joe Murad started years ago. I am getting absolutely bombarded with questions. People asking me, well, what do I do? Now, when that happens, it's usually a result of people fearing or they've taken some significant losses in their account and they just need some type of voice of reason to calm them down. That's why we have a very large audience on this call right now. But the reason I'm getting bombarded is because people still are uncertain. Let me please just tell you, relax, just stay calm, be proactive, think ahead. Don't think reactive, what am I going to do if the power goes out? Think ahead. What if the power goes out? What are people going to be doing? If I lose my job, how am I going to make money? Some people are going to be making a lot of money just trading the markets, even if they get laid off. If they have money in their accounts, this is a backup for a lot of people. I'm going to tell you, if you're counting on this as another source of income and you never traded in your life, please don't do that. Please don't just put your money at risk until you learn risk management skills, right? But once you learn risk management, you learn how to put the signals in your favor, you're dramatically increasing the odds. Now, for my current students, I'm looking at the list here. We've got a lot of students. I have coaching and mentoring students. If you want me to do that with you, if you want me to coach you, if you want me to mentor you, send me an email. And what I'm going to do, I normally only take 2 or 3 people at a time. I'm going to ramp that up to 10 people at a time. I'm going to do 10. If you don't have a whole lot of money in your account, you want to keep that cost down, then maybe what I'll do is I'll find maybe a group of 10 people that don't have a whole lot of money to keep the cost lower. Okay, you get where I'm going with that? I want to help everybody, but the more people that I can help at once, the better. So I'm going to increase my coaching from 3 students to 10 students. I'm going to have to cap it at 10 because I'm not going to have enough time in the day to do that and still be able to write my reports and still be able to do, the other things that I do in the market. So if you're interested in that, send me an email or type in your email in the Q&A box down here. Just type it in. I don't need to know phone numbers or anything. What I'll do is I just send you the information. You put that in the bottom, your email address, and then I'll be absolutely more than happy to help you. In fact, a lot of people like Dan in California, I think Dan's on here. I talked to Dan this morning, and because of the time difference, it works out really nicely for someone like Dan. And then I have other people like Dr. Billy, who's busy on the front lines, battling coronavirus in the hospital. Well, guess what? I have a call with him tomorrow at 6 p.m. after hours, right? So I will accommodate. I will help people. Just make sure you stay calm, you stay focused, stay plugged in. And I promise you, I am going to guide you through this. Like I said before, it's not my first rodeo here. I've been through this many times. I know how it's going to play out. Can't tell you what's going to happen with, Washington and how that's all going to play out. But I can tell you that no matter what happens in the world, folks, you have to bank on this. No matter what happens in the world, the United States of America is always going to have the best stock market, the best liquidity, and as a result, being the best game in town. If we have the best, absolute best game in town, right, where are people going to put their money? Where's the world going to park their money? We're not just trading U.S. stocks here. We're trading American depository receipts. You look at BABA, right? Some people are trading BABA, right? This is an ADR. It's an American depository receipt. This is the Google equivalent, right, that we see on the other side of the world. Well, guess what? This is my forecast for BABA. That's a hammer pattern. That's very bullish. There's gaps above the market here. People are going to use the internet because it's an alternative source of entertainment for them. People are going to use the internet to trade. People are going to use the internet to shop. The world is not coming to an end. It's just changing. We're seeing a global shift driven by fear, of course, and unfortunately. I wish people were a little bit more brave. But the fact is, people will be driven by fear. Those who are bold, those who are brave and have courage to step in when everyone is running for the exit signs, these are the people that are going to make fortunes. I'm telling you, folks, do not fear this. Embrace it. And I hope, and I even pray that each and every one of you just stay connected, help each other. If the power goes out, don't panic. Call your neighbor. And I think John is on here. When the power went out, I called my neighbor John. Hey, John, how you doing? He's sitting on the front porch, having a nice drink with his wife, relaxing, no power. But you know what? You know why John is so relaxed? Because John's a former Marine. He's seen the worst of the worst in combat. This is nothing to a guy like John. He's relaxed. He's looking at opportunity. And you know what? My whole community where we live in Cedar Key, we're all pilots and most of us, the large majority of us, are veterans of one, department or the other, Navy, Marines, Army, and we're all coming together. So my point is, during this time, stick together. Stay connected, right? Stay connected to the market, guys. This is free. My weekly market reports are free. I have videos online that are free. Soak it all up. Learn how to read the charts. And here's what happens. I'm going to take one more stock here. BLM. Oh, wait, hold on. I did Suncor. John and Vivian came with SU. Let me just do this one. I might have time for one more. Hold on, Vivian. Hold on, John. SU. All right. Here's one that's gotten beaten up. All right, it's a $10 stock. Now let's look at this. Weekly chart. I don't see support there. Go monthly chart. There's support down there. Unfortunately, it's here. It's not that black line. That's the bottom of the chart right there. But look, here's a monthly chart. Where in history of this stock did we see an even more dramatic drop than this? But guess what? 2008 went from 70 down to 15. Look at that. Went from 70 to 15. And then what happened? It went from 15 up to 49. Look at that. This is the opportunity I'm talking about. And notice, if you go back, here, I'll do this a little bit more in line. If I go back and draw what's called the speed line, this is an upward trend. I'm just basically taking a line and intersecting the middle, like the mean. Do that. Look at this. Look at this. You see anything familiar yet? Can anyone see it yet? Look at the angle of these lines. If you took a protractor and measured that angle, almost all of them are like a 45-degree angle here. So what does that mean? Does it mean we're guaranteed to have a 45-degree angle here? I don't know. But you know what? If you start accumulating a company like Suncor at $10 or $11, and you see that the length of these upswings last, 2, maybe 3 years, then guess what? You start buying it now as an even investment. 2 or 3 years from now, good chance you're going to quadruple your money when it's trading 40 or 41. Again, no guarantee. I'm just looking at history. This chart is nothing more than a historic representation of the price action. History repeats over and over and over because money cycles. Money cycles, just like the seasons. Everybody said before, from 10 to 15 years, you should go through extreme volatility times, right? This is one of those times. Just go ahead and embrace it. Let me look at one more. Social media. Yeah, Richard, you're absolutely right. Social media like Facebook, Twitter. I looked at Twitter today. Twitter, you got to understand. This is still bearish right here, this Twitter monthly chart. But if you look at the daily chart, you have a bullish engulfing pattern here. I'm expecting Twitter to go from where it is right now, just around 25 up to 30. I'm expecting Twitter to do this and then sell off a little bit. Okay? Right now, short-term indicators look good. You got Facebook, a little bit more expensive of a stock, but you can see that hammer pattern, drop in volume on the way down is bullish. Wide divergence in the moving average is bullish. Gaps above the market are bullish. Stochastics going up after a buy signal, bullish. CCI just crossed with a buy signal. I'd like to see that go up. If that goes up tomorrow, bullish, bullish, bullish right down the line. All right? So we have close to a record attendance here tonight, folks. And I want to tell you, I didn't run out of content, and I certainly, from the looks of it, did not run out of stock symbols. Again, if you're interested in having me coach you through a very tough time here, call me, contact me. I'll email you. I'll take your email down, and I'll send you some information. I want to help as many people as I can. So the next call or webinar that I do, please share the link with everyone you know, even if they're not investors. I want them to understand that everything's going to be okay, right? And I could show them the signals that I'm getting on the charts that reflect fear and confidence, okay? And as confidence starts coming into the market again, I think we're all going to be absolutely fine. So don't worry about that. All right, folks, that's it. That's 1 hour. I'm going to peel off right now, grab a quick bite to eat, and I'll try reaching out to everyone on the email list. Again, put your email address in there, and I'll send you a link so you can stay in touch with me. All right, folks, have a good night. So long.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.